Assalamu alaikum wa rahmatullahi wa barakatuh. This is Mohammed Aljaber, back with you again with another question from chapter 6 questions. This time we have exercise 6-6A, and this particular question is for a special order decision. So let's read the question together first, and then we'll see the requirement and decide what do we need to do with this particular exercise. So starting from the top, the question says, Visberg Concrete Company pours concrete slabs for single-family dwellings. Lansing Construction Company, which operates outside of Visberg's normal sales territory, asks Visberg to pour 40 slabs for Lansing's new development of homes. Visberg has the capacity to build 300 slabs and is presently working on 250 of them. And if you remember, when I explained this chapter to you, I explained that the first thing that you need to consider in special orders is whether or not you have the capacity to produce that special order, right? That's the first step, because otherwise, if you don't have the capacity to produce anything more, so let's say that Visberg has the capacity to produce 300 slabs and they're already producing 300 slabs, then there's no point of running the analysis and trying to decide whether it was beneficial for the company to accept that order or not, right? So this line here shows us that Visberg actually has the capacity, because the company Lansing Construction, which is placing that special order, are requesting 40 slabs, right? While Visberg is currently producing 250, and they do have a capacity for 300. So 300 minus 250, that's 50 slabs. So that 40 falls within the capacity or the production capacity of Visberg, right? So let's continue on. Lansing is willing to pay only $3,300 per slab. Visberg estimates the cost of a typical job to include unit level materials of 1,440, unit level labor of 720, and an allocated portion of facility level overhead of 1,200. Now, what's required here? Should Visberg accept or reject the special order to pour the 40 slabs for 3,300 each, and support your answer with an appropriate computation. All right? Now, I'll go over the few details here that are important to us. The second step, after we decided that Visberg actually has the capacity to meet that special order, now we need to decide what kind of information is relevant. And we said that the relevant information is mainly the relevant revenues and the relevant costs, right? So the incremental revenue that that accepting that special order would produce to us, and the costs that are associated with meeting that special order, right? So I'll go back to here. Most of that information you can see here in this part, right? So I will highlight it. Let's use yellow. Lansing is willing to pay only $3,300 per slab. So that number is important to us because it's going to help us determine how much incremental revenue we're going to make if we accept that order, right? And then Visberg estimates the cost of a typical job to include unit level materials of 1,440. Now, producing those extra 40 slabs, will it incur that unit level materials cost? Yes. So I'm going to also highlight this. That makes it relevant. And unit level labor, are we still going to pay some workers to do that job? Of course, yes. So we're also going to incur this, right? So this is part of our avoidable costs. And finally, an allocated portion of facility level overhead of 1,200. Now, this particular cost is not really avoidable, as we discussed in our class example. Why? Because this is a facility level cost that is allocated to this part of production. If we don't produce that extra 40 slabs, we're still going to incur that 1,200. The only difference is going to be, perhaps it's going to be allocated to something else, right? So this could be anything. It could be utilities, could be tax, cost, depreciation, whatever, but it is a facility level cost. So producing that extra 40 slabs or not, we're not going to avoid this cost. And since it is not an avoidable cost, we're not going to use it or incorporate it in our calculation. Okay? So what we're going to do here, we're going to do a small table where we're going to list our relevant revenues and costs, right? So I'm going to call this column here relevant revenue and costs. Okay? And of course, as always, we're going to start with the revenue. So the sales revenue if we take that order for the extra 40 slabs, is going to be 40, which is the number of extra slabs, multiplied by the selling price, which was here, right? 3,300 per slab that Lansing Construction is offering us. So 3,300 quickly get my calculator out. 40 multiplied by 3,300, that's going to give us a differential revenue or an incremental revenue of $132,000. Okay. Next, the cost of raw materials, which is this one. Costs of raw materials that we're gonna incur on top of our current raw materials cost if we produce those 40 extra slabs of concrete. So let's say cost of raw materials 40, which is the number of slabs, multiplied by 1,440. $1,440. Again, going back to our calculator, 40 multiplied by 1,440, that's 57,600. Okay. And then the cost of labor next. So the cost of direct labor, which is going to be 40 multiplied by 720. 40 multiplied by 720 equals 28,800. Okay. Do we include this? No. Right? So now we can calculate what's going to be our contribution to profits if we accept this offer. So I'll write contribution to profits. Go back to my calculator. 132,000 minus 57,600 minus 28,800. That's going to be 45,600. Okay. And as we explained in class, as long as the differential revenue is higher or more than the avoidable costs, then we accept. So we're gonna get a positive contribution to profit, and that means we should, let me write it down. What was the name of the company? Visberg. So I'll say Visberg company should accept the special order. And again, of course, this is just the quantitative consideration, right? So quantitatively speaking, since this special order is going to contribute to our profits, okay, with a positive amount of cash, quantitatively speaking, we should accept that offer. Now, the management team of Visberg should have or might have other considerations. That's not of our business as accountants. We just need to run the numbers and see mathematically, is it positive for the company to accept that offer, or is it negative? And then the management might have other qualitative considerations that they might actually reject that offer or that special order based on. All right? But your job as an accountant, run the numbers, see whether it's going to give you a positive or a negative contribution to the profit. And if it's positive, then you should advise or recommend that the company accepts that special order. All right? So that is the solution to exercise 6-6A. Hope you guys enjoyed it, and I'll see you in the next one.